Arguably, an even bigger question is, how do we invest to prepare for a crash? For those who don't know, examples of emerging markets include India, Mexico, Russia, Pakistan, Saudi Arabia, China, Brazil. These are economies that are, as per the word, emerging. They're not fully developed, but they're in that stage of developing and growing in terms of business. Now, so I would say yes, I'm nervous about gold because I can't eat it and it pays no dividend, but it has two wicked advantages over Bitcoin, which, by the way, Bitcoin, Grantham is not a fan of one bit. He said, "What is the future value of the dividend stream of Bitcoin? I can tell you that it doesn't take a prize-winning mathematician, it is nil." Grantham, he clearly disagrees, and he leans much more towards gold. The one thing that we definitely do agree on is our dislike towards the Fed and its market manipulation. If you have a 6% yield on your assets, by reinvesting that you can double your money in 12 years. If you turn it into a 3% yield by doubling your price, you're worth more on paper, but in real life, you can only eat the dividends. And now they're 3% a year, and you double your money in 24 years. In other words, the higher the asset price, the lower the rate at which you can compound wealth. And if you're not in the game and you're a beginner, you can have great difficulty ever getting into that game. By definition, it means that the rich get richer as you price down the yield. The technology, the AI, the so-called 10x stocks, those are high growth but very pricey. Jeremy Grantham, the well-esteemed value investor, thinks that the next market crash will rival the one that we had in 1929 and 2000. Are there any opportunities available, or is everything overpriced? You can see my previous video to see his full viewpoints on why that is the case. So value stocks, that's where Grantham sees opportunity in today's market. Note that down. The other opportunity that Grantham sees is in emerging markets. He said, the good news is that overseas, they have not had the same huge bull market and the same overpricing that we have had. Staying is when the crash comes. So Grantham thinks that in today's market, the opportunity is in the low growth stocks, or the value stocks that you'd traditionally call them. The ones that are going to get wiped out the most will be the high growth stocks, the so-called 10x ones that have just shot up in price. When consumer and investor confidence decreases, these stocks that have gone up so high have the most to lose. The likes of Tesla, Mayo, Zomdica, etc. Because these are the ones that sell at high prices compared to what they bring in terms of profit. They've been this cheap 2 or 3 times, and each time it's worked out very well. So you can buy emerging markets and you can look at the intersection between those two ideas, which is the low growth stocks within the emerging markets. And they are handsomely priced. You should be able to make a really decent 10-20 year return there. End quote. So that's interesting. When Grantham looks at the more mature markets, especially the USA, he sees low long-term returns. The emerging markets, however, that's where he sees the real potential. And that, of course, is a heaven-sent opportunity, because you can go into the emerging markets and they are absolutely not that expensive, and compared to the S&P, they are about as cheap as they've ever been. The interesting thing about these types of markets is that investors often shy away from them, even though they're growing strongly. Everyone wants to invest in the likes of the USA or Canada or the UK because things have been established there. And we'll say that stock pays a $5 dividend a year. So that's obviously a 5% return, right? Now let's say you pay $200 for that exact same stock. Now it's only a 2.5% return a year. Because you paid a higher price, your return is now less. Hence, low demand for stocks results in lower prices and higher potential returns. Another sector in this market where Grantham sees opportunity is the green sector. He said, "I also think shares that benefit from the greening of the economy will do much better than the rest." Every seasoned investor knows this. And this is one reason why there's so much opportunity in those emerging markets, because so few investors are looking there. And speaking on intrinsic value, something which some argue doesn't have intrinsic value is gold. Grantham is not one of those people. He has bought gold before and doesn't mind it as an investment and hedge. It will take trillions of dollars to decarbonize the global system. It will dominate everyone's portfolio, and if you have to own US stocks, they're the ones to own. So look around for a good global climate change fund. Anything to do with renewable energy, the electrification of the system, electric cars, etc. These are all going to have top-line revenues that dwarf the declining growth rate of the rest of the global economy. I'm happy to say that GMO has won, and they're doing very well now that the focus is clearly, finally, took 20 years to wake up, but in the last year, people are really beginning to understand. But in 10, 15, 20 years time, that's going to change because the world needs to become more sustainable. If you can own those stocks now that are going to help this change, well, there's a lot of potential there. The one thing that I would like to add to this is make sure that you pay an appropriate price for these types of stocks. The likes of Tesla, QuantumScape, A2 Milk. Yes, they all have strong potential, but as Warren Buffett says, you must pay a fair price for a stock below its intrinsic value. He said, gold has had the odd 12,000 year test, which it has passed pretty well. And secondly, gold does have some fallback qualities. It doesn't tarnish, it's unique in that sense. Everything that was ever made of gold is still around. The size of the problem and the need to move money into greening the economy." End quote. So what he's getting at is currently the economy is dominated by gas, fuel, smoke, and unclean energy. The stocks that are stuck in their old ways and benefit from unsustainable energy, well, they're unlikely to do as great. Bitcoin is 100% faith. Come the next market phase where faith is at a minimum, what do we think will happen to a stock whose entire reason for existence is faith and nothing but faith? End quote. It will never pay you a dividend. If you're desperate, can you eat it? No, you can't. Its entire value is on the greater fool, is it not? So Bitcoin could be worth $1 million a unit if you can find someone to pay it. Now, I don't completely agree with Grantham on Bitcoin here. I think its technology offers so much more value over traditional currency. Its market cap is currently a lot cheaper than gold's. So I think there is room for a small percentage in one's portfolio for Bitcoin. Grantham said, by pushing up asset prices, you do two things. You make it difficult to impossible for people to get into the game. The purchase of a house is too expensive. The purchase of anything in stocks is much higher per dividend, or because it makes you feel great because your stocks are going higher, but it's all artificial. Thank you for watching, everyone.